Welcome to Bears in Exile. Today is Thursday, July the 12th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, and all the rest. Okay, it was yet another one of those days. Very promising on the open, down, and in comes the miracle save to keep it from getting too bad. It's it's quite something to see it day after day after day after day. Matter of fact, I'll clean this up. And here we are with the Dow, ending once again with another hammer. A little bit of a top at the tail at the top, but so not quite as pretty as yesterday's, but still a hammer, a possible reversal signal. Once again, closing below the long-term moving average bar, bearish. We have the cross of the middle Bollinger Band complete, bearish. We pierced the major price consensus level, bearish. We even got down into the area that we were looking for, not quite to the bottom of it, but lining up perfect with the major price consensus level of the previous month to the penny, which is what we were, one of the things we were looking for, and bounced off of it. Getting down there, bearish. Certainly hitting the target and bouncing off. Yes, that adds to the possibility of a bounce tomorrow. We have the CCI going down, the 14-day RSI moving average going down. Make absolutely sure. Actually, it's going sideways. It's not going down. Going sideways. We have the fast stochastic trying to turn a little bit, slow, still going down. RSI sloping up, very interesting. We have the bearish cross of the MACD and downtick on the MACD histogram. Definitely overall much more bearish than bullish. Couple of little weird signals here that aren't jiving to a waterfall fall, but we thought it would get caught here in this level, and I would prefer it if the real body of the candle got down into that level before it stopped and it not just have a tail go into it. But I don't get to pick, so hopefully a little more down tomorrow before it has to stop. If it doesn't just blow right through it, I don't think that it can, but we shall see. Getting the tiniest inclination in the heat map of the problem, and there it is. We talked last night about closing below this rising trend line, how that was very bearish, and continuing down some more to show off the 60-minute. 60-minute is kind of a little beast. Been talking in the last couple of videos about the daily looks horrible, the 60-minute looks like it needs to bounce, and every day, kind of in reverse order. The 60-minute should bounce first, then the daily should take over. Instead, we've had the daily take over and the 60-minute relieve itself to some extent. It's exactly what happened today. We had our nice drop, and it did this the entire day. Just climb. Essentially almost erasing pretty much everything. At one point, it had erased everything. It went green, which is pretty darn ridiculous considering that there was no positive news or anything else. Minor dump at the end of the day to save it for the Bears, but nonetheless, something very interesting to see here. I'm going to go back in time to yesterday. This is what we would have seen on last night's video. And at this point in time, we can see the stochastics trying to rise, CCI trying to rise, RSI trying to rise, MACD histogram all trying to climb, which begs for a bounce, right? Now go forward to the end of today. Here we are. This is what's so interesting to me. You had this move. It relieved some of the tension in the heat map. You have all of the indicators which were begging for a move up, right, at this point. I'll just cut it off here, see where their position is. And now, we have still ended lower than its position yesterday, and yet all of the secondaries are in a higher position, which actually means that now they have a little bit of breathing room to continue going down if they choose to. Certainly, they could go up. The MACD is still ticking up. MACD histogram, ever so slight tick up, but now it's in the positive area, not the negative. The RSI, much higher, and now it's pointing down again instead of pointing up. The 14-day RSI moving average has moved up a little bit, yet it's now pointing down. Same with the stochastics, although the slow is still pointing up, but their positioning compared to this point, they have relieved themselves. Same thing with the RSI. You had it right here. It was pointing up. Now it's higher, the price is lower, and the CCI is now pointing down. How about that? Not the end of the world for the bulls in the 60-minute time frame, but certainly not in as dire shape, begging for a move up as they were last night in the 60-minute time frame. I just find that interesting. SPX on the daily. All right, now this one, very similar. Of course, it did not pierce the major price consensus level. It's nowhere near there. Ending yet again with a hammer. This one is pretty. Possible reversal signal. Middle Bollinger Band cross is not completed. It finally closed really nice below the long-term moving average bar, which has compressed into a flat line and is not nearly as developed as the Dow on the downside, which is a good and a bad thing. Good, it has more room to move to the downside. Bad, it's not in such a hurry as the Dow to get down here. We have 6 red bars in a row. It's quite a lot without having a green day, so something to be aware of. Now this is very interesting. We talked about this ascending line last couple nights. Well, last night, and we talked about it in the daily running thread from 2 days ago. And yesterday closing, right at it. Today finally closing below it, which is a very, very bearish signal. I mean, definitively. Could it go up and want to bump its head onto it on the upside before continuing down? Yeah, absolutely, it's possible. We have nothing in the heat map suggesting anything. We are down on the CCI, sideways on the 14-day RSI moving average. Stochastics are in a little bit of disagreement. Up on the RSI, down on the histogram getting the bearish cross, and down on the MACD histogram. MACD histogram. Beyond that, we have this line right here connecting these 2 points, actually these 3 points, and roughly coincides with the major price consensus level, which is very close to the 200-day moving average, which isn't far away from the lower price consensus level, which isn't far away from the major price consensus level from the last month. Should it be caught here if it gets that low? Yes, especially with the, I don't know, that line's kind of interesting to me. There's no need to rehash the 60-minute. It is the same as the Dow, so I will skip it. There's plenty of other things to look at. And how about this one for disappointment? The VIX. Yesterday was a massive, not great candle. Weren't happy about that. Today it ended higher, low 18s. Pretty weak showing. At its height, getting to the long-term moving average bar, backing away. And this for fun little channel that we have drawn, it pierced it on the top and it pierced it on the bottom and landed right in the middle, closing below the lower price consensus level for the month. That is not a good sign. I think it gives a little bit of extra boost to the possibility that there will be a green day tomorrow. Beyond that, we are still working our way out of this bottoming area in the heat map. It has not gone away yet. Up on the CCI, mixed on the stochastic, down on the 14-day RSI moving average, not a good sign. Down on the RSI, up on the histogram, up on the MACD, attempting a bullish cross. This is more positive than negative, but it is not so positive that, I'm really happy about it. So it is what it is. Like I've been saying, we have to get to and close above 20 for the bears to be really happy. And at the moment, it's just fighting it out, just like stinking SPX and the Dow. All these they keep fighting to hold everything up. They want to put the brakes on the down movement. I mean, all of these moves have been, 100 points or less. This whole down move phase, we've only lost not even 50 points on SPX. Which brings me to another really cool point, which I'll talk about when I get to UUP. Fascinating. Absolutely fascinating. Matter of fact, I'll just go to UUP now. UUP. Very cool. It did not hold its strength today, ending with a small spinning top with a gap, which is not great. We don't want an island reversal here. But we broke out the top. The euro is now, it went down into the 1.1s and broke the 1.2s. Huge news. And really the indexes should have been down 200 plus points today. Instead, the Dow is down 31 points. But it is what it is. It closed right above the upper price consensus level for the previous month, which is a good sign. But got to have a green candle above all of this to make it hold. We just don't have that yet. We still have a minor area in the heat map for topping, nothing major yet. Up on the CCI, holding high on the stochastics, 14-day RSI moving average just starting to get under the weight to the upside. Up on the histogram, up on the MACD, this is looking really good in the daily time frame. And actually, I'm going to do it with, no, I'll do it with this one. We're going to look at FXE here in a second. Actually, we'll look at it now. It was able to bounce up a little bit after its gap down. This is making a massive low, multi-year low. We do have a little bit of warning sign in the heat map. CCI holding low, going sideways. 14-day RSI moving average looping over all this room to move to the downside. Stochastics holding low. CCI slight tick up, down on the histogram, down on the MACD. Ugly. But what's really important, this is so interesting. We haven't been down this low on the euro since January 2010. And January 2010, just to show you, where were we? No. January 2010, where were we? We were in between Dow 10,500 and roughly at its low around Dow 10K. That is January 2010. That's where the euro was last time it was this low. SPX, come on. No. SPX was 1150 to 1150. No, wait, that's not right. 1150 to 1050. Last time the euro was at this level. And so we've, this whole week, which has been massively negative, 50 points, roundabout, less than 50 points to the downside, and yet with the currencies where they are, we are still 200 points to almost 300 points overvalued. If the currencies were the chief indication of where everything should be based upon money. Something to think about. I think it's very interesting. I certainly don't think it's good, but it certainly shows. I mean, you look at these tails at the bottom, and people just want to fight tooth or nail to keep this from falling apart. And I mean, even at its worst, it's thousands of points above where it should be valued on the history of money. So very interesting. Very, very interesting. TNA. All right. How about this? Yeah, we went lower. Yeah, we have a giant tail. It went down, it kissed the upper price consensus level, backed away with the miracle rally. Closed above the long-term moving average bar, which is a good sign for the bulls. 14-day RSI moving average is still moving up. Stochastic still moving down, although the fast is running out of gas. Down on the CCI, up on the RSI, down on the histogram, down on the MACD. We have no bullish or bearish cross yet. Very, very different. This one should lead, and this one is stronger. Another reason why perhaps tomorrow will be a green day. But if it's not, at least it reset this so that now we only have 5 candles, and we can start over with the count of 1 if it's red, but I'm kind of thinking it's more likely to be green. We took a look at UUP. It's not looking good. FXE. We took a oh yeah, we looked at this already too. It doesn't look good in the daily, not at all. It is extended, but we don't have an uptick to work with at the moment. CompQ, the NASDAQ. Very interesting. Little doji long-tailed star kissing the major price consensus level and backing away. What a surprise. Closing below the long-term moving average bar in conflict with TNA. Middle Bollinger Band getting its cross. 14-day RSI moving average going sideways. Stochastics mixed. Down on the CCI, up on the RSI. Starting a bearish cross on the MACD. Down on the MACD histogram. Are we going to be able to completely sort out the negative divergence? Yeah, I think that it already has. Interesting. Different. Very, very different. This isn't telling us that much now, is it? XOI, oil. Fighting, fighting, fighting. Inside the long-term moving average bar. Making a lower low than yesterday, bearish. But fairly weak close for the bears, that is. 14-day RSI moving average moving up. Stochastics mixed. Down on the CCI, up on the RSI, sideways on the MACD. Down on the MACD histogram. Certainly looks like, to me, it could get a bump up. And in the end, the MACD histogram should win out eventually, even if it sets up a... I don't think it'll set up a bigger negative divergence, but... yeah, this one, I think, even though it looks bad in the daily, this still tells me that a bump up is much, much more likely. But moving on to Apple. Apple, we said, has done extremely well during this down move, and it certainly has. Today, the downtick target was met. looks like on the dot. Backed away from it. Very slight lower, but it hit the 592, which was the downtick target. This is now fixed. It is free to do what it wants. We have to wait and see what it does next. 14-day RSI moving average, uptick. Down on the CCI, down on the stochastics, up on the RSI, down on the histogram, down on the MACD, no bearish cross yet. So, in my opinion, very strong showing by Apple. Oops, wrong one. GE trying to get a better read on the Dow. Look at this one. Very different. It's not a hammer. It closed below the long-term moving average bar. We have the middle Bollinger Band perfect cross. We're getting close to the lower Bollinger Band, but still some room to move. Slight tick in the heat map still. Down on the... Is that down? Slight down tick on the 14-day RSI moving average. Down on the CCI. Down on the stochastics. The fast is not curling up. Up on the RSI. Down on the histogram. Down on the MACD. This looks worse than the Dow and SPX. This one should lead. So, very interesting. Very interesting. This one has done very well for the predictive stuff we've been doing. So, in keeping with the spirit of prediction, 60-minute time frame. Does this one beg for a bounce? Look at this. Go back in time to yesterday. Definitely have a sign in the heat map, possible bottoming area. Have the 14-day RSI moving average trying to curl over or curl up. We have tried to curl up on the stochastics, trying to curl up on the CCI, RSI, histogram, MACD, and now today. Very interesting. It has relieved some of the tension, 60-minute time frame. The stochastic is higher than it was while at its peak. It's now pointing down again instead of up. I'm sorry, that was the CCI. Stochastic was trying to curl up. Price is lower than it was at this point. Stochastic is now higher, and it's curling down. You do have the 14-day still moving to the upside. RSI is trying to curl up. It's now higher. The price is now lower, and it's pointing down. And even the histogram is now positive. Price is lower, and it's very slightly trying to tick down. And the MACD, instead of pointing up, is now pointing sideways. Very interesting. JP Morgan, most important bank, has earnings tomorrow before the open. They're going to set the tone for the entire day. And we have Chinese data overnight, both of which are going to determine what happens tomorrow. Today ending with almost a spinning top, closing once again below major price consensus level. 14-day RSI moving average, it's going sideways. Stochastics curling up, CCI going down, RSI going up, histogram going down, MACD going down. Very mixed. Overall, definitely more bearish than bullish. But we're not going to know until the news is out. 60-minute time frame. This probably isn't going to tell us anything because the news is going to shape everything, but we might as well take a look. Look at that. 14-day RSI moving average high, pointing down. CCI pointing down. Stochastics pointing down. RSI pointing down. Histogram sloping down. MACD going for a bearish cross, 60-minute time frame. If the news is poor, the sucker is already on its way. Everything is in alignment. to take out this previous low. And what is there to catch it? Nothing until about 32.83, 32.95. No, that's not right. 32.77, 32.85, 32.77. Couple dollars down from where we are now. Could do it easily on the gap, and that will hurt the market. Very interesting. This is in disagreement with many of the charts asking for a move up, but people have been trying to save the market. Got to capture it. If we get a candle without a bottoming tail, that means that they've given up on that idea. So something to be watching for, waiting for, and alternatively, of course, the books can be cooked. The question will be, can it exceed this level right here, which is 34.92, only $1, should be extremely simple. And beyond that, next area would be the just above 36, between 36 and 36.40, roundabout. Very interesting. XLF, the financials. Spinning top. Closing below the long-term moving average bar, bearish. Middle Bollinger Band going for its cross, bearish. Nothing in the heat map. Down on the CCI. Sideways on the 14-day RSI moving average. Down on the stochastics. Up on the RSI. Down on the histogram. Down on the MACD, looking for a bearish cross. This one is aligned very well in the daily time frame for a down move, presumably to the major price consensus level, only 20 cents away. And beyond that, the major price consensus level from the previous month, lining up with these lows relative, and the 200-day moving average, and the lower Bollinger Band, at right about and just shy of $14. GLD, I forgot this one last night. I didn't do it. Still weak. Still don't like this chart. Still right in the middle of this entire box that's been created. Possible bottoming area. Down on the CCI, down on the 14-day RSI moving average. Disagreement in the stochastics, up on the RSI, down on the histogram, down on the MACD. A bearish chart, but one that I wouldn't trust either way. And SLV, nice day, bullish engulfing. Nothing with the middle Bollinger Band, came somewhat close to the previous low, real candle that is, not the tail. Stochastics curling over to the upside. CCI going sideways, RSI, 14-day RSI moving average down, RSI up, histogram up, MACD up. Much better than gold. And I'm running out of stuff about Walmart. What I'm playing. This little beastie could have had a red bar today. Changed the entire dynamic of the stock. Didn't do so. Yet another spinning top. This one even larger than the last one. It's bullish engulfing. Not that I trust that. Lots of excessive separation. Down on the CCI, down on the stochastics, up on the 14-day RSI moving average, up on the RSI, up on the histogram, up on the MACD, down on the histogram. Very, very mixed in the indicators. Massive warning for a long time in the heat map. And I still believe, once this one gets a downtick, which could happen at any time, it will be pretty darn sweet, because I don't think that a bubble corrected move will catch it, simply because it's so darn far away from the long-term moving average bar. Bubble corrective move at this point would take it shy of 71, somewhere in the 70, 65 area, and a retest of the upper price consensus level, which would coincide at this moment with a bar retest, is way down here at 68.50. Just needs a little push. Just a little push. Making a new recent high by a couple of pennies today. Having resistance with the tails. Down on the CCI. Rolling over on the stochastics. Actually disagreement. 14-day RSI moving average heading down. RSI heading down. Histogram heading down. MACD heading down. Man, oh man, I wish it would just break out of this stinking bottom that it has. Actually, it did break out of this bottoming area and made a new one. But, anyways. That's going to do it. We're at the mercy of China. We're for overnight. We're at the mercy of JP Morgan in the morning. And it's going to be... it's going to be wild one way or the other. It's going to shoot off to the moon, or it's going to fall like a rock. I don't know which way it's going to go. So many conflicting signals. So many conflicting charts. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.